I'm Charlotte McLeod with investingnews.com, and here today with me is Will Rhind, CEO of GraniteShares. Thank you so much for being here. Great to have you back.
Yes, thank you. Good to be on as always, Charlotte. Good to see you.
Really good to be catching up with you. And we are picking up from our conversation all the way back in February toward the end of the year. And at the time, you had said gold was the precious metal that was going to stand out in 2024, which certainly I think has proved to be very correct. I am curious though, gold has risen quite substantially. We've seen multiple all-time highs. Has it gone faster than you expected?
I think that it's performed really well. I don't think it's necessarily been something that I wasn't expecting or has been beyond what I expected. I think that we were just in an environment where we wondered could gold continue to go up, or could it go higher than it was, which is already all-time highs at that period. So yes, the prices continued to go up, and I think now as we've seen just over the last few days, that it's gone up even more.
Yeah, it does seem to kind of just keep going. I'm wondering what factors you see as being most responsible for this price rise that we've been seeing.
I think that the big thing that has happened, and maybe it's too soon even just for me to kind of call this a trend as such, but the big thing that I've been saying all year, which has been missing, which is the fear in the market, certainly seems to be starting to show through in the last few days. And that, to me, has been the big change that has at least, put us to these new levels in gold. And so that's a combination of fears around the most lately what's going on in the Middle East, geopolitical tensions, concerns about a broader war now in the Middle East, and then coupled with what we've seen in the U.S. market, which has just started to get some jittery data, which has caused the market to come down from its then all-time high just in the last sort of few weeks. So things starting to look like they're turning, and from that perspective, gold always does well in that sort of environment.
I think that makes a lot of sense. And so you're saying that that fear element is starting to pick up for various reasons. And do you think those fears are justified? And I'm thinking particularly when it comes to the stock market, where things are looking a little bit different than they were toward the beginning of the year. Is that fear justified?
Well, it is at the moment, because we've started to see some big days down, which we haven't seen really this year. We've hit one or two, but now we've had this period of, I'd say, starting at the beginning of July, a kind of a downturn. Where we've had a mix of up and down days, but broadly speaking, the market direction has been downward. And so that, coupled with the latest sort of ratcheting up of tensions over in the Middle East, has caused, I think, some renewed interest in gold and ratcheted up that fear factor.
Okay, and definitely we're going to come back to gold and things going on there. But during our last conversation, we had talked about the dominance of the Magnificent Seven, which are looking a little bit less magnificent at this point. So we're seeing quarterly results come out from these companies. Do you have any takeaways that you would highlight there that investors should be aware of?
I think so far, it's been a bit of a mixed bag, which has kind of been the story of the Magnificent Seven since the beginning of the year. Up until really this, last few weeks, you had kind of a broad story of Apple and Tesla underperforming, to a lesser extent, perhaps Google and the other members of the Magnificent Seven, particularly NVIDIA, very much outperforming. This time around, so far, it seems like we've had a bit of a mixed, again, earnings season, where some companies like Meta, of course, NVIDIA is yet to report, have performed really well. Other companies such as Microsoft and Tesla, of course, less well. We've got Amazon, and we have Apple reporting after the close today. So we'll have to see, because that, again, will give us a bit more of a barometer, because those businesses touch multiple aspects in terms of the interest in the particular sector. So whether it's AI, whether that's consumer, or whether it's other sectors such as demand for different advertising products and services. So I think we'll get a better idea at the end of today. But so far, again, to me, the story of this year has been a little bit of a mixed bag between those 7 companies.
And what does that tell us about the AI story? This was another topic that we talked about at the beginning of the year about all the hype that was surrounding it. What is it telling us? Is this something that's starting to fade a little bit? What are your thoughts?
It's probably too early to say whether it's starting to fade because we see it in different results where Meta, it looks like that was paying off and one of the reasons why the stock rallied after earnings. Other companies that have reported already, not really much of a bounce. If anything, a slight negative in terms of the capex that's been spent on AI from the likes of Google and Microsoft. So it's still one of these things where it's going to take a while to play out. We already know some of the winners in terms of NVIDIA that provide that hardware, but the broader tech companies, certainly Tesla, for example, on one hand had a lot of AI promise, but we've really yet to see that materialize in any material form in terms of the results.
Okay, so this is something to keep an eye on. And as you say, they are all separate companies, although it's very tempting to look at them all as a group. So keep an eye there. I also wanted to check in with you on what's going on with the Fed because the latest meeting wrapped up. And of course, we saw rates stay unchanged. And really, the Fed has been able to keep rates higher for longer than many people expected. I know now we're looking toward that cut in September being quite likely. But what are your thoughts? Do we see that cut in September? What does the rest of the year look like for the Fed?
I think that one of the things that's changed indeed over the last few weeks, and we got it, again today, is just some data coming out that sort of indicates that not just the narrative that we've been used to around inflation coming down, but now some signs of potential weakness in the economy. It was the ISM manufacturing number this time around, but we get the non-farm payroll tomorrow. And it seems just at this moment in time that the trend of bad news is good news has now reversed, and bad news is actually bad news when it comes to the stocks. And so I think that got no reason to really go against the idea that the Fed will start implementing the first rate cut in September. And indeed, it may even see more rate cuts if this manufacturing data and if the overall economic data continues to look worse at this stage. But at the moment, I think it seems like that's going to happen. We've seen other central banks around the world, including the UK, starting to cut rates. So for the banks that raised rates, it seems like now we're at the top of that cycle. It's just a question of when we'll start to implement that. The Fed may be as soon as September, but other central banks around the world have already started cutting. And so we have to see what will happen in terms of the data between now and September.
It's a very interesting comment about bad news actually being bad news, where before we were kind of in a bit of an opposite world. So what do you think is sparking that change where we're kind of going back maybe to where things are a little bit more normal reactions?
It's difficult to say. And again, I almost didn't say it because, again, it feels like we're too early to start really saying or jumping into conclusions that is part of a broader trend. I think that what I've seen certainly over the last month is that, whereas before number like ISM manufacturing number coming in weaker than expected would probably be seen as a stock market positive because it accelerates the case for lower rates. This time around is, again, I'm not saying it's the only thing that's driving stocks lower right now, but it seems like we're kind of returning to that, base macro fundamental idea of bad news being bad news and good news being good news.
Right. And so, as you say, we have to wait and see for quite a few things here. There's a lot in play. But overall, what's your broad outlook for the U.S. economy?
I still think that what we're seeing a bit of at the moment is, so first of all, I'm still quite positive on the economy, and I don't really see enough weakness in the numbers to kind of sound the alarm bell immediately. My personal take on it is it's a little bit more the case of the summer doldrums. And, sometimes in the cases where we have, these trading periods in late July and in August where liquidity is lower and therefore the market is more prone to outsized moves as a result of it. I think it's more that than anything else. But of course, as we get further into the year, only time will tell as to what exactly, happens.
Right. And okay, so going back to gold, we've talked about the fear angle for gold, which seems to be quite important at the moment. Where would you rank the Fed in terms of impact on gold at the moment?
Well, again, I would say that the Fed has been, one of the most important drivers of gold, vis-a-vis the view that the Fed would start or launch into a interest rate cutting cycle, which of course has been one of the things that has driven gold higher, with people anticipating that the natural result of interest rates falling would be the dollar weakening. And so the Fed has definitely been at the forefront of investors' thinking. I just think that they've almost taken a bit of a back seat over the last few weeks to some of the other things going on in the world, namely the geopolitical tensions in the Middle East, and of course the market jitters that we've seen just over the last sort of few weeks here in the US.
Yes, I think that's definitely a common theme that I've been hearing about the Fed kind of taking a backseat to other things going on for gold. So very interesting to watch. And if we put all of this together, I know as we've been mentioning, there's so much uncertainty. There's a lot of decisions still to come. What do you see as gold's path forward in 2024 in terms of the price?
I think that the gold price will continue to do well, and look at the price of the other metals sort of in comparison. That I think you started to see gold catch a bit of a bid, like I said, for those reasons, whereas the other metals, have declined a little bit over the last month or so, perhaps reflecting, the broader economic weakness that we've seen in the market. So I think in a world where the Fed starts to cut interest rates, and hopefully we don't have a ratcheting up of certainly an outbreak of war that's more serious than what we already have, both in Ukraine and in the Middle East. But if those things happen, you could clearly see gold prices rising to over $2,500 an ounce between now and year end.
Another topic that I wanted to touch on in terms of gold is we had spoken at the beginning of the year about the divergence between the gold price and the gold stocks. And you had mentioned for the gold companies, inflation was weighing on them at the time and not really allowing them to catch up as much as people might like to see. So we do have the quarterly results coming out for the gold miners now. And are you seeing changes there in this second quarter?
Yeah, I think again that's always really, in my mind, kind of the key question is that are they able to control those costs? And that will be really the key thing to watch out for, in those quarterly results for certainly some of the biggest or the most well-known companies. And, if they can keep a lid on costs, they've got the metal price clearly, at their backs, in terms of gold moving up to a higher price than it was, over the last 3 months, and indeed over the last 6 months. So that's certainly, tailwind for the business. What remains to be seen is whether they're able to take advantage of that by keeping costs, in check.
Exactly. So that will be also something to keep an eye on. And moving forward, in terms of inflation, what do you see coming as we move into the end of the year?
Okay, I do think that this narrative that the Fed has certainly been sort of pushing over the last 12 months is definitely more right than wrong. It does feel like inflation's coming down. That there's really majority of the data points to that being the case, with some sort of holdouts for structural reasons. But it does feel like inflation is on the right track. And if you blend in some of these less positive, economic data points as well, then it really feels like inflation's coming down and probably falling faster than has even been predicted by the Fed.
Okay, thank you for going over that. And I have what I think is a fun question. We'll see. So, if gold is the 2024 standout precious metal, what would you say is the runner up?
Well, For this year, I'd really have to say silver, because silver has performed quite well. I think the problem really with saying even silver is that, platinum and palladium, the other potential choices, have had another sort of difficult year overall, particularly palladium. So it's really hard to sort of say outside of gold, which has been the star of the show, what has been the runner-up. I think in an environment where gold prices are hitting all-time highs, all things being equal, people might have expected silver prices to hit or get back to all-time highs, just haven't been able to do that. And indeed, you just sold off over the last month or so again. So I think you'd have to look to silver as being that, secondary metal. And, with the cousins, if you will, of platinum, palladium, again, having their moments, but not necessarily performing that well this year so far.
Right. And so platinum, palladium, we have talked definitely about platinum in the past, but those two metals likely to remain range bound in terms of their price in 2024.
I think it's just, again, sort of symptomatic of looking for that catalyst to drive the metal to a fundamentally higher level. And, in the case of both platinum and palladium, there hasn't been that catalyst that really has been able to do that in a sustainable way. There have been moments, and that's why we look at the graph, you'll see, or the chart, you'll see some, highs and lows, but largely it's been choppy because whenever there's been a positive momentum or a story that propelled prices higher, it's sort of been met with a bit of resistance, and ultimately prices come down again. So looking for that catalyst always to sort of move the metal up to a higher level.
Okay. Kind of what I expected to hear. I always feel like I should check in with you on those metals. So thank you for that. This was a really good overview, I think, of what's going on with gold, some interesting shifts in the market right now. We can wrap it up there, but did you have any final thoughts that you would want to leave investors with right now? I think certainly we can tell that there's a lot going on that people need to keep in mind.
I would think that there'd be a renewed interest in gold now for the latter part of the year, for no other reason other than it's been so bullish the first real part of the year, first 6 months or so. And we've seen obviously equity markets make new all-time highs. And I think almost gold has made all-time highs rather, silently or secretly, in the sense I don't really get the sense that investors have really been focused on it. And so perhaps to some people, learning that gold has outperformed, certain major equity indices year to date might be a big surprise. And so I think that now, looking into the back half of this year where economic data could potentially weaken further, we could potentially see, rate cuts actually being a negative to markets rather than a positive in light of recessionary fears. Gold could actually have another strong 6 months of the year. And I think from an investor perspective, it will start to focus a little bit more on the defensive elements of gold in an environment where people are starting to worry about potential recession or geopolitical risk, and ultimately the value of the equity portfolio or the fixed income portfolio deteriorating.
Okay, I think that makes a lot of sense. Great place to leave it. And thank you so much, as always, for coming on to talk about gold and other topics as well. Great to have you.
Thank you, Charlotte. Always good to be on your show. Thank you. And thanks for having me back.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Will Rhind of GraniteShares. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.